6 months. So the uptick in the price of Bitcoin we would have seen in this fall, October, kind of late Q3, early Q4, was pulled forward by about 6 months. You're seeing, a very interesting dynamic. The ETF has attracted capital that previously was invested in mining equity stocks, so stocks in companies like Marathon. Some of that flowed out of those stocks and into the ETFs. And then you also have considerable outflows. GBTC has seen almost 50% outflows of its original Bitcoin balance from when the ETFs launched. And so now you're seeing significant outflows from GBTC, a lot of which has likely flown back into the other ETFs. You had a lot of people who bought shares in GBTC at 40% discount when Bitcoin was at $15,000 and $20,000, and now they're obviously monetizing that and then reinvesting some of those proceeds. But essentially, most of the ETF inflows have really been retail dollars at this point. It's still, as an institution, a little bit hard to invest in these ETFs. And as anybody who maybe banks with B of A or some of these other large banks finds, you have to literally ask permission to almost buy these ETFs through the banks. So again, it's just a question of the volatility.
Your outlook for Bitcoin, is it factoring in market forces for stocks or the broader economic landscape? Or do you think Bitcoin, per your forecast, will move more or less independently based on its own supply-demand fundamentals?
So you have to look at what money it is that is going into Bitcoin that is creating the demand. So you have normal demand, that is, if the markets are moving towards a risk-on bias, then you're going to start seeing more capital allocated to higher risk assets, which would obviously benefit Bitcoin. That doesn't necessarily mean that the equity markets are going up at the same time. You can look at the macroeconomic situation today, and what you're seeing is one where you have persistent inflation pressures, you have persistent geopolitical pressures, and let's just say exogenous events that are causing some of that inflation to remain very sticky. Geopolitical situation in the Suez area, that's creating shipping challenges. You now also have the Port of Baltimore issues, which is another exogenous event that's going to create some form of impact on the inflation side. While you're to 15,000, which was kind of the low point of the most recent drawdowns. And you would have this delta between the real market value of the asset versus the book value. Now there's clarity. It's mark-to-market treatment, which makes it much easier. So essentially, a company will hold Bitcoin on their balance sheet just like they hold cash. Now, does that mean they're likely to hold more of their assets in Bitcoin? I think over time, yes, it's going to take a while, but I think you're starting to see companies begin to evaluate it as a way to store cash. Your alternatives today are to put money into T-bills. You're going to get 5%, 5.5%, something like that. So what's the alternative? And Michael Saylor has for years been the advocate of taking corporate assets and putting them into Bitcoin. And while he has accumulated more Bitcoin than most companies would feel comfortable with, it certainly has worked out quite well for him. So I think it's really something that companies are going to evaluate. But it's not just companies, it's countries are also evaluating this. There are sovereigns who want to hold assets in Bitcoin. Why? Because it can't be controlled by another government. And having sovereignty over your assets is very important, especially as a commodity producer. So I think you're going to start seeing more countries holding systematically. More people will order, more miners will order more machines. They'll build more capacity because there's more profit to be extracted. In that way, Bitcoin operates very much like gold or petroleum markets. If the price of oil drops, oil producers shut down their oil rigs and their production. If it goes up, they turn them back on. It's the same thing with Bitcoin miners. You add capacity when price is high, you shut down capacity when price is low.
Well, let's talk more about mining itself. You are an expert on Bitcoin mining after all. Let's talk about halving. It's coming up in a couple of weeks. How do you think the Bitcoin mining costs would be affected post-halving?
Well, essentially, your marginal cost to produce will double. So to produce a Bitcoin, if today it costs you, I'll use $20,000 as a round number, to produce Bitcoin, then, and that is your cost of energy to produce Bitcoin, then your cost to produce a Bitcoin post halving would be $40,000 notionally. There are some slight differences. Your operating expense that is non-energy related relative to mining Bitcoin, it does not double. That cost doesn't double. It just takes twice as much compute to generate the same number of Bitcoin. Maybe a small supply shock. It's not a big supply shock. It's a small supply shock, but it's still 10 to 15% of typically the liquidity in the marketplace. And again, these halving events will have less impact on the price of Bitcoin over time as liquidity in the market for Bitcoin increases. So if 10,000, 15,000, 20,000 Bitcoin are trading hands a day, then that's very different than if only a couple thousand Bitcoin are changing a day, right? So it's very likely that what we'll see is there'll be some upwards pricing pressure on Bitcoin post-halving. And again, as I said earlier, when we were talking about price predictions, likely we'll end this year above the former all-time high. And then we'll see another run up likely in 2025 as more adoption happens. But it's really the cycle post the peak, so post the next year peak, that will be different going forward. And that's something it's hard to tell because it's a question of institutional demand. The US today is producing more oil and natural gas than it has in history. It's one of the largest producers in the world. And until that stops, I think we'll continue to see good pricing on commodities.
Well, let's just take Marathon Digital as an example. What energy sources are predominantly behind the production of your Bitcoin?
So we're predominantly renewable. So 56% is solar, wind, etc. And the balance is a mix of natural gas, nuclear, other things. So the natural gas component of our energy mix is obviously impacted by commodity pricing. Solar and wind, the good thing is there's no marginal cost really to producing that electricity. And so those prices remain fairly constant. What we're also doing is we're very focused on moving into an area we call energy harvesting. And this is where we're taking true stranded energy in the form of methane gas, landfill biomass, and other sources of energy, converting that. Those two revenue sources can offset potentially your energy cost for mining Bitcoin.
Okay. If somebody were to say to you, well, I guess at least my next question, if somebody were to say to you, I'm concerned about whether or not a Bitcoin miner as a business is sustainable over the long term. I'm talking about decades down the line as the cost of mining inevitably go up to a point where it may not be sustainable for many businesses, or that computing power becomes so great that, the necessary computing power becomes so great that we no longer have the capacity to mine Bitcoin at scale. How would you respond to that?
Well, I'd say two things, or actually three things. One, there's a floor on what energy costs, right? Natural gas pricing won't fall below a certain level. Wind, solar won't fall below a certain level. So there's a floor as to how low commercial energy pricing can go. The only way to get your energy costs lower is to generate your own energy, as I just explained a minute ago. And so what will happen is eventually commercial investment in Bitcoin mining, and the only similarity they have is they both consume energy to a great scale. So Bitcoin miners will over time be forced to essentially go into the business of generating their own energy or finding energy that is free, essentially. And doing things where Bitcoin mining is just a byproduct of what they're doing. And I think that is the long-term trend for Bitcoin mining. And it also means Bitcoin mining will move from large utility scale sites, which is the typical standard today, down to a long tail of small implementations where it's maybe 1 megawatt, 2 megawatt, 3 megawatt. And that requires systems that are very self-contained, very redundant, very automated. And that's the core of our technology investments. Over the past few weeks, we've announced a number of technologies that essentially will form the basis for the ability to mine fully remote, fully hands-off, small scale, with very high efficiency anywhere.